Let's talk to David Paul. He's the Managing Director of VectorVest UK. Morning to you, young David.
Yes, good morning, Ross.
Right, so we have a number of slides to go through. Hopefully they're all thought-provoking like you. Without further ado, let's get on the racetrack and get this motor going. Right, headline, worry-free investing update. I use those terms very loosely, don't we, in these tricky times?
Well, I talked about this a couple of months ago on your show here, and I just wanted to update everybody as to how it's going, and it's going exceptionally well. Worry-free is a mechanical system. It's our most conservative investing system on VectorVest, and I've tested it, and we've tested it at VectorVest over the last 20 years, and it robustly produces profits both in the UK and in the USA over that period. And it's had a particularly good run this year.
Brilliant. Okay, so let's go through the slides. So the UK market timing, are you on a buy signal at the moment?
Well, yes, the longer term trend is up, certainly, and that the longer term measure of the market, which at VectorVest we call a confirmed call, is what we use for worry-free investing. So yeah, it had a slight sell-off over the last few weeks, and then last Tuesday I think we got a new buy signal.
Right.
In the sell-off, however, because the shares that we choose for worry-free investing are the UK's safest shares, none of those shares came close to their stop loss during a little bit of a pullback. So there was no angst in the air during the pullback. It takes quite a severe pullback to cause one of the worry-free shares to actually fall and hit its stop loss. So
understood.
All is good.
Okay, let's move to the US in terms of the market timing. What is this telling us?
Well, the US market is also trending upwards, and that's a measure of the US market over the last 6 months. And again, it's got a confirmed call on the upside. I'm reasonably optimistic. In the next slide, I've got a longer term view of the American market, which is a weekly chart over the last 3 years, and there's a very pronounced trend line on that particular chart, and it has broken northwards out of what technicians refer to as a symmetrical triangle, pretty textbook 5-wave symmetrical triangle as well. But the thing of note is the divergence between the price and the MACD indicator, and there is a reverse divergence. Some technicians refer to it as a slingshot, which is about 2.5 years old, and that invariably precipitates a strong leg up. So I'm reasonably optimistic based on that technical pattern. However, there's no doubt that the market could easily churn during the course of the summer.
Yeah. Okay, so let's move on to the relative safety. What is this telling us?
Well, first of all, at VectorVest we look at every share on the London stock market, and we look and we assign a value, a safety of earnings, and a number for the trend, and we call that VST. Now, in worry-free investing, we actually sort all of our shares by this metric called relative safety, which measures the safety and the predictability of the earnings. So in worry-free investing, we want to find those shares and bring those shares to the top of the pile that have an impeccable record of making money, and all those ghastly financial ratios, I'm a mechanical engineer, are getting better. Those are the shares that we want to invest in worry-free investing. We want to be, when there's a confirmed up, we want to be fully invested, and the methodology of investing is explained on the next slide. Yeah, there we go. When we get a confirmed up, and we got one of those last Tuesday, I want to buy the top 10 shares as rated by relative safety on the UK market, spreading ourselves across the market, so never ever having any more than 2 shares in the one sector of the economy.
That sounds sensible.
Okay. Now, when the general market is rising, there's a very small probability that you'll be stopped out of one of those shares, but they could drop the ball.
Right.
If they do drop the ball and the general market is still rising, resort and replace with a share that we don't currently hold. So we're always fully invested when the general market is rising. Now, markets breathe in and they breathe out just like us, and sooner or later there's going to be a down signal, and if there was a prolonged sell-off, then you could quite easily get stopped out of one of your worry-free shares. If that occurs, we do not replace, we build a cash position. So in an up market, we're always fully invested. In a down market, if we got stopped out of 2 shares, we would have 8 share positions, and 20% of our loot would be in cash. Okay?
Understood.
When we get the next confirmed up, we resort and make sure that we're fully invested. Very difficult to beat the market, Mus, if you're not fully invested when the market is rising.
Understood.
And that's the process.
Okay, so let's move on to the next slide in terms of the objectives.
The objectives clearly are capital appreciation and dividends. And if you're in the US, more difficult in the UK, but if you're in the US, you could certainly employ some form of options writing strategy, such as covered calls, to get a little bit more income. But that's much more difficult than UK context. In the US, that's exceptionally common. And even the most conservative investors would have a go at writing covered calls on some of those worry-free shares that they hold. And that could quite easily bring in, conservatively done, an extra 5% income a year. Okay, and we teach that in our worry-free US course.
Understood. Okay, so let's take a look at some track records.
Well, I've tested for the last 20 years, and I've spent most of the last 20 years looking at charts, so my eyes are shot, so I have to put my glasses on even to read it. But there was 177 trades over the last 20 years in the period between 96 and 2016. This is the American market. We started with $100,000, and along the way, we made $51,000 worth of dividends, which I haven't added into the mix. So it's not a great deal of trading over 20 years.
Yep, we like that.
In the next slide, the track record, $100,000 has turned into $683,000 over that 20-year period, which is about 18% annualized rate of return. As you can see, 2000 to 2003, it was flat. You can see the pullback during the crisis in 2007. And since that, we've had quite a good time up the page. So a fairly solid track record. Clearly, in the pullback in 2007, we were fully in cash. Okay, our market timing was saying the market was falling, and we got stopped out of pretty much everything.
Okay, so let's take a look at the UK side.
UK, we started with £50,000.
Yeah.
And that's done over the last 10 years. And the £50,000 has turned into £269,000, which is a better number than the American market. But clearly, over the last 10 years, we're in a particularly good market here. So, and it's broken up on the upside. And in the next slide, the performance over the last couple of months since we had a major buy signal on the 17th of April, after the sell-off in the first 3 months of the year. And since the 17th of April, our top 10 worry-free shares have appreciated by 20%, and the market is up by 5%.
Wow.
With no effort whatsoever. Now, we got a confirmed call about 2-3 weeks ago down, and none of those shares came anywhere close to the stop loss during that period. Now, over the last year, in the next slide, it's done what that ghastly advert says. It's done what it says in the tin, because the market's up 3% in the last year, and our worry-free methodology with virtually no trading is up 18%. So it's outperformed the market 5x. It's a mechanical method that takes very little monitoring, that buys into the UK's safest shares. And on VectorVest, there's a full document which goes through all the rules. There's very few rules. And it's pretty much the only mechanical trading system that I've ever come across that over a long period of time produces robust results in the stock market.
Okay, let's wrap up with your last slide.
Well, yes, VectorVest.co.uk, and I'm David.
Dr. David Paul.
Dr. David Paul, yes, I have a PhD in mechanical engineering. David.paul@vectorvest.com. You can get hold of me anytime. We'll be holding seminars and webcasts throughout the summer. So if you go to VectorVest.co.uk, you can register for one of those.
David, thank you very much.
Thank you, Mus.